Hey everybody, Frank from Velocity Money Mortgage, and thank you so much for trusting us with your either home purchase or refinance. And we don't take that lightly. We love to help families with the financing of their homes. And this topic is about the loan estimate. Before you open the loan estimate, we require that our borrowers watch this video first. This one is for FHA loans, and let me explain why. It literally looks like a foreign language to you. It's overwhelming to see all these numbers, and it's overwhelming to look at the nature of the numbers. For example, with FHA, it becomes very confusing, but once I explain line item by line item, it'll make perfect sense. So I'm gonna reference my screen. You guys are gonna see it on your screen, and it's going to give you 90 to 98% of your questions will be answered by this video. Watch it first, then you're gonna open up your loan estimate, and then we can get on a consultation call with either myself or your loan officer. So let's go to page one. Page one shows the loan amount. In this case, it's $441,849, and the estimate of the interest rate. Now, the interest rate, we may lock on the day that we disclose, or we may lock at a future date. In the next box, it shows the principal and interest. In this case, it's $2,865. Okay? The projected payments discuss the principal and interest, discuss the monthly mortgage insurance. With FHA loans, guys, the mortgage insurance is monthly, and there's also an upfront MIP fee, which is mortgage insurance premium. I'm going to explain later in the document. But in this projected payments, $2,865.82 principal and interest, $198 a month for mortgage insurance, and $642 for escrow. Escrow is your taxes and your homeowner's insurance. So all in on this mortgage, the payment is $3,706. Now, things like homeowner's insurance, which is inside the escrow payment, can vary. And right before the closing, the taxes may get updated and they can be slightly higher as well. Okay? Now keep something else in mind. The initial loan estimate is like a block of ice. We have to sort of over disclose a little bit because we can get in trouble for under disclosing. So the way I like to explain it to people is it's sort of a block of ice that we're turning into an ice sculpture. And as we go along, lock your interest rate and get your loan clear to close. In the end, our closing department and the title company work together to finalize all the fees. So you'll see a few loan estimates. You'll see one in the beginning. You'll see one when your rate is locked. You'll also see an initial closing disclosure, which by law has to be 3 days prior to closing. That one often matches the initial loan estimate. And the final CD are the numbers that are finalized. So let's keep going. In this case, on the bottom of page one, it shows estimated closing costs of $22,358, and estimated cash to close of $31,508. This person happened to be putting 3.5% down. But keep something in mind. The mortgage insurance premium upfront fee, which I'm going to show you in the next page, is 1.75% of the loan amount. But it is not cash out of pocket. I repeat, it is not cash out of pocket. It's rolled into the loan amount. So without making it too confusing, its loan amount is the percentage of purchase price minus the 3.5% or whatever you put down, and then the 1.75% is added to that. So it is not cash out of pocket, but what's confusing is it comes up as a closing cost. It freaks people out because they see this big number and they get mad and they're like, I don't want to pay this cash. It's actually rolled into the loan amount. Okay, so feel free to watch this back several times. Here's page two. Box A, closing cost details. In this case, this person was having to pay 0.672 or $2,969 to get the rate. In this case, we were buying down the rate. So the rate was a little bit higher, but we used these dollars to buy down the rate. okay? That's called a rate buy down. Sometimes it makes sense because we'll pay X amount of dollars to save X amount on a payment, okay? Now, this lender has a commitment fee of $1,195. They happen to call it an application fee. That's the lender fee. Typically, lender fees are anywhere from $1,000 to $1,600. It's a fee that the lender uses to pay their underwriters, processors, closers. Okay, box B. It says things that you could shop for. Appraisal fee. You can't really shop the appraisal. I don't know why it says that. You're gonna pay a third-party appraiser that we are not even allowed to talk to, and they're appraising the property that you're buying. So whatever their fee is, you pay. In this case, $585. Credit check fee, $94. The credit reports have become very expensive. At the closing, you pay the credit report fee. The MERS fee, $25. Flood certification, $8. No big deal. Now, the famous mortgage insurance premium. Boom, there it is. $7,599 rolled into the loan. So once again, it shows up as a closing cost. It is and it isn't because you're not out of pocket. It's rolled into the loan. Okay? And then in this case, there was a verification of employment fee of $150. We don't always have that. It depends on if the employer charges a fee to you, the borrower. Box C. All of these are title charges. Now, through your attorney and or our relationship and or if you know somebody that owns a title company, you can shop for this, but it's usually state mandated. But sometimes what they call junk fees, you can save some money. So all of these things in box C are all title charges. That has nothing to do with us. We don't charge it. We can't make any money on it. We're not a title company. So box C is a completely separate third party. Once again, the lender, guys, really only has, if we're buying down points to get a better rate, and the commitment fee. That's it. We make money by selling the loan to the specific lender that we're dealing with. So most of these fees on the loan estimate are what they call third-party fees. Okay, now, box D is a culmination of A, B, and C. Now, if it says $15,884, subtract out the $75.99 because that, once again, is rolled into the loan. Box E, recording fee and transfer tax. Recording fee is actually normally about $400, but in this case, it's a little overestimated, and transfer tax. Certain states, like New Jersey, the transfer tax is paid by the seller. Other states, like Pennsylvania, it's a 50-50 split between the seller and the buyer. Florida, it's more often that the buyer pays it. So in this case, we have nothing for transfer tax because this is a New Jersey transaction. Now, the next set, box F and box G, is what they call prepaid interest and escrows. When we see a big block, hey, your closing costs are $15,000, well, not really, because prepaid interest and escrows is your money that's going towards the purchase of the home. Let me explain. In box F, homeowner's insurance, $1,200. Here's another tricky thing. You have to pay it upfront for a year in advance, and then it'll also be taken out for, say, 3 months. So the homeowner's insurance companies want a year in full before you even move into the home. That's this $1,200. Then the prepaid interest in box F is how many ever days is left in the month times the per diem interest. So in this case, it's $81.71 a day, and there was only 4 days left in the month. $327 goes towards prepaid interest. Here's the good news. If this loan closes, let's say, in October, with 4 days left to go in October, you do not have a payment November 1. You first have a payment December 1. So you're sort of skipping a month. Why is that? Because mortgages are done in arrears, meaning on November 1, the interest that you pay is for the previous 30 days or 31 days. So mortgages are done in arrears. In this case also, the property taxes are not listed out in box F, and it should normally show at least 2 or 3 months. But what happens is it defaulted down to box G under property taxes for 4 months. So the title company, on behalf of the lender, is taking 4 months escrow. Usually within a couple of weeks, 3 months or a quarter will be paid to the city for that quarter's taxes. And every month you pay your mortgage payment, your principal, interest, mortgage insurance, premium, and taxes are included in your mortgage payment. They're replenishing the escrow account so that it builds up, so that in the following quarter, they could pay the taxes again. So let me back up a little bit to the top of box G. This is where I mentioned the homeowner's insurance. So you pay a year in advance, and you also pay 3 more months that goes into the escrow account, because every single month when you make your mortgage payment, it's replenishing the escrow. So next year at this time, there's enough money in the account to pay the homeowner's insurance again for a year. So that's the balance there of making sure that account has enough money to put into it for the escrow amounts to be paid. Taxes are paid quarterly and homeowners is paid yearly. Some places in Pennsylvania, for example, taxes also could be paid yearly, or they could be paid every 6 months. Let's go to box H. If you're in a state or part of the state that has an attorney, the attorney fee will be in here. If you've got an attorney, we estimate what their fee would be. You could ask them what their specific fee would be. We put $1,900, sometimes it's $1,500, sometimes it's $1,750, sometimes it's $2,250. And title insurance owner's policy is a policy that you could take out to insure your home when you buy it against any back title issues. Okay, so I adds up E, F, G, and H. Okay, now you see in J, sometimes as part of the interest rate, we could get you a lender credit. So it might show $8,000 in box A, but I could possibly, depending on what the premium is from the lender, possibly get you some money back. Now in this case, with this borrower, they kind of had a low credit score, so it was actually costing them money to get this rate. And since these disclosures went out, rates are way better. So don't worry about what it says for the rate, just worry about how this is being explained to you. So if you go to the cash to close box, it says closing cost $22,358, but we know that the MIP is rolled in. This borrower has already put $8,100, so the total cash to close will be the 3.5% down that they're putting down, plus the actual closing cost, not including the MIP, minus whatever deposit they gave. And in this case, they owe $31,508 at the closing. Now, it's actually not at the closing because things like appraisal for $585 and the homeowner's insurance actually has to be paid in advance of the closing. So number one, this is estimated high. Number two, there are things along the way that you will pay. So I think this borrower in particular will end up bringing about $26,000, $27,000 to the closing. Okay, now that's a lot of information. Thank you for listening, and thank you for paying attention. When you take this video and you watch it once, and then you look at yours, you can reference this video back, check it out. Me or my team will get on a call with you, and we'll rock and roll from there with your specific loan estimate. But this helps you not freak out when you first get it, not get confused, not get annoyed, and we'll walk you through your particular situation. Thank you so much. God bless everybody. Looking forward to getting your loan closed and moving you into your new home. And don't forget to invite us to your barbecue. Take care, everybody.